Folks, you better get ready. Sofi is right in the middle of some massive momentum, and this will be one of the most captivating plays in the fintech space heading into Trump's inauguration on January 20th. We're talking about everything from major student loan policy shifts to a new interest rate environment that could make or break SoFi's growth potential. And in today's video, we're going to go into number one, the major Trump catalyst that is coming to SoFi, how Trump's policies will likely make SoFi skyrocket. Number two, how high the data suggests SoFi stock will climb. I'm going to give you a clear price target with clear reasoning. Number three, the best way to play SoFi stock in my view. Of course, here at ZipTrader, we never chase. We take risk-managed positions, right? So if you're holding SoFi thinking about buying or just want to stay ahead of the game, hit that like button, subscribe, and let's get into what's happening here. And as always, if you're the one taking the risky, you got to be the one doing the frisky. Okay, so folks, as far as I know, we were one of the first to alert SoFi calls this election cycle. We alerted the lovely SoFi calls on October 18th at $1.14. She ran to $4.65 as of highs yesterday. That's a run of about 307% alert price to high. This is in addition to many of the other winners that we've had in this very hot market condition. Whether you were talking Palantir, Mara, Riot, Coin, Carvana, Tesla, Upstart, we are in an unprecedented market condition heading into inauguration. And with that, I think we're going to continue to have massive winners and massive opportunity. No promises because past performance doesn't equal future returns, but I do believe that now is the time to buckle in and put your head down and get to work. And so if you'd like to get access to our options alerts and our hours of step-by-step lessons, link down below, coupon code BLACK75 will get you 75% off early Black Friday sale. Okay, let's get to work. SoFi stock. Let's kick it off with the student loan part of this. So Biden's administration had been on a big mission in the space with policies that completely changed the landscape for student loan companies, including specifically SoFi. You remember Biden's pause on federal loan payments kept millions of borrowers from needing to pay, effectively freezing a huge part of SoFi's core refinancing business. One could say that Biden's loan policy was not so fly for SoFi. Think about it. With millions of people not needing to refinance, SoFi saw a big chunk of its market completely up and disappear overnight. It's like being a chef and suddenly half your ingredients are taken off the menu. To me, that sounds not so fly, and if you're SoFi, it quite frankly wasn't. Now, SoFi didn't just sit back and take the hit, though. They adapted, they diversified, they focused hard on diversifying their services, expanding into banking, investment, insurance, credit, and even launching new products. They've expanded their membership. They've gone all out to make sure that they were able to survive Biden's policies. They knew they couldn't just rely on refinancing, especially with Biden's debt cancellation efforts lingering in the air. Although the Supreme Court blocked some of Biden's broader forgiveness programs, he still managed to cancel over $175 billion in student loan debt for millions of people. For SoFi, that translated into fewer loans to refinance and a limited refinancing market. Now, that being said, to be fair, a lot of the education, especially higher education in this country, is a complete scam and extremely overpriced and increasingly politicized. I can't blame people for wanting their debt wiped, especially considering how much colleges push useless skills these days. I got my bachelor's degree a while back and I got a government scholarship/grant, so I'll never bash on people for wanting government forgiveness, but at the same time, the colleges need to be checked because these universities are the ones that charge so much for nothing, and when the government gives them more and more money and allows students to take on more and more debt, well, what happens? Well, the universities are like, time to raise our prices. But anywho, let's get back on topic here. This is from a business perspective. And here's where it gets interesting. We're now looking at a complete new era in student loans thanks to Trump being elected and the GOP taking control of both the Senate and the House. On top of that, we do have a Republican-leaning Supreme Court. Trump and the Republicans have made it no secret that they want to slash the government's involvement in the student loan market substantially. They're even talking about eliminating the Department of Education, or at least transferring its responsibilities, including student loans, over to the Treasury. So what exactly does that mean for SoFi? Is it so fly or not so fly? Well, actually, it's pretty damn fly, and it means a lot of opportunity, an absolute ton of opportunity. You see, folks, if you do some digging on this, the majority of student loans are federal, and private lenders like SoFi currently make up less than 10% of that market. But if the government cuts back, shifts student loans to the Treasury, or limits federal loan programs, that's a massive door opening for SoFi. SoFi. We're talking about potentially tapping into a $1.7 trillion market where students and graduates will increasingly turn to private lenders to refinance or fund their education. And Trump's policy approach could play perfectly into SoFi's hands. Trump has long talked about empowering the private sector, as Republicans often do, and if he pushes for reforms that incentivize borrowers to refinance privately with simpler repayment plans or more competitive rates, that's going to be a huge gateway for SoFi to rack up some massive wins. Winnie-winitos. With its track record of helping borrowers refinance at lower rates, SoFi would be in an excellent position to capture those customers. In short, Trump's policies could not only revive, but actually supercharge SoFi's core refinancing business, turning a challenging market under Biden into a thriving one. Now, folks, that's just one side of the coin. Let's look at the second major factor that could be a huge win for SoFi's business model, and that's the factor of interest rates. We've all cried endlessly as the Fed aggressively hiked interest rates over the past years to combat inflation, and that's had a massive impact across the board. Higher rates mean borrowing costs go up, which can make loans a harder sell for lenders like SoFi. But we've finally entered a new phase. The Federal Reserve is cutting, and it will continue this easing of rates as we head into next year and into the coming years. And for SoFi, that will absolutely be a game changer. Here's why. As interest rates drop, the cost of borrowing becomes more attractive for consumers. SoFi offers a wide range of lending products, from personal loans to mortgages to credit cards, all of which stand to benefit from this. Lower rates make these loans more affordable, driving up demand as more people see SoFi as a cost-effective choice for their financing needs. It's a win-win scenario. Lower rates also mean that SoFi's own borrowing costs will decrease. They can lend money at competitive rates without sacrificing margins, boosting profitability while attracting more customers. This is crucial because as interest rates ease, SoFi can both reduce its own costs and expand its loan offerings at a time when consumers are looking for more affordable options. Now let's talk about how this actually impacts SoFi's revenue and growth potential. So in Q3, we saw that SoFi's net interest income surged 66% year over year to $154 million. But that's not all. SoFi's non-interest income, the money they make from fee-based services like financial management, credit cards, and investing, grew even faster, up 235% to $84 million. They've been shifting toward this diversified fee-based model to create stable revenue streams, and as rates drop, they'll have even more flexibility to balance between interest-based and non-interest revenue. But what about student loans, you ask? Well, with rates going down, refinancing becomes attractive again, especially for people carrying higher rate debt. They're going to want to refinance. You're going to want your debt servicing costs to be lower, right? SoFi could swoop in and offer better terms than existing federal loans, which could attract waves of borrowers as federal repayments ramp up and private refinancing gains steam. In my view, it's like we have the perfect storm of opportunity for SoFi. Policy shifts on one side and favorable rates on the other. Okay, so how high can SoFi climb if you're looking at the stock? Well, we're trending up pretty aggressively, but how much higher could this possibly go? Have we run most of the way, or do we have evidence that this could run much higher? Well, let's look at the fundamentals here. So again, SoFi's revenue in Q3 was up 34% year over year with consistent double-digit growth for nearly 2 years now. And that is in a negative, a bad market environment, right? A pretty bad one, I mean, at least for loans. SoFi's operating and net income both turned positive in December 2023 and have stayed there, reaching $63.9 million and $60.7 million respectively in Q3 of 2024. Plus, we've seen major institutional investors like JP Morgan adding 3.6 million shares and Dimensional Fund Advisors adding 11.6 million shares in Q3. When big money is betting on a stock like this, it's a sign of serious growth potential. It's not as big of a sign as Nancy Pelosi betting on it, because then it would be a sure thing. But when you have big institutional investors like JP Morgan adding shares and big Dimensional Fund Advisors adding 11.6 million shares, well, that's a big stinking deal. Let's talk about valuation. Here's the kicker on valuation. SoFi is currently trading at about 6x sales, 6 times sales. Now, that's not dirt cheap, but consider that in 2021, SoFi was trading at nearly 18x sales, significantly higher than today. If we just matched 2021's sales multiple, we'd be at over $40 a share. With the kind of revenue growth that we are seeing, the product expansion, and a favorable environment coming in 2025, I think that SoFi will absolutely hit and even exceed those 2021 prices. Okay, so with all that being said, how does one actually play SoFi SoFly? Well, if you are a trader, my biggest suggestion is with options. We send out near daily alerts on our top ideas, and our SoFi alert ran up some 307% at highs. But if you're watching the stock now, you're not in the stock, you haven't played the stock yet, well, watch this dip. At the risk of sounding overly simplistic, you simply want the stock to breathe before buying. We don't like chasing. If you are a lion chasing a gazelle, go ahead and do it. But if you are a human trying to make money on a stock, don't chase. It doesn't make any sense. When it comes to the stock market, those who chase are not the lions. They are the gazelles. And trust me, if you chase, those lions are going to eat you alive, and it's going to be hurtful. It's going to be painful, and the lion will never be full. So folks, please, please, please do not chase. We see momentum coming overall for Sofi, and she's going to have a dippy-dippito, but be aware that the policies that will be put into place under Trump will, in all likelihood, move Sofi stock towards higher and higher highs all 2025. So if you're somebody that's looking at this right now, don't chase, wait for a dippy-dippito, but also understand that once we get that dippy-dippito and you start showing signs of recovery, well, the overall momentum is suggesting that Sofi is going to head higher all 2025. So anyways, here's the bottom line, folks. Sofi's in a prime position to capitalize on a Trump policy shift that would roll back the government's role in student loans and open up the private market entirely. At the same time, the Fed's easing cycle means Sofi's lending products could skyrocket in popularity, all while maintaining strong margins and beautiful profitability. If you're looking for a growth play with massive catalysts, Sofi might just be it. Anyways, folks, that caps off today's video. Let us know in the comments, do you think Sofi's got what it takes to double or triple in value over the next year? And is this on your radar as a stock to watch under these new conditions? Let us know in the comment section down below. Make sure to hit that ravishing like button, subscribe, and until next time, stay safe out there because there are a lot of vicious lions on the loose and you don't want to get bit.